Hi, welcome to this video day, which is on Saturday, June 22nd. We're just going to be looking at a trade setup we looked at last week, which is USD CNH, which we think is going to move significantly, or the USD is going to move significantly to the upside. But also in this video, what I want to do is discuss China's potential impact on the global economy, where it could cause a severe move to risk off or even a crash, and also just some other currency pairs to look out for in relation to what is going on in China. Now, I said it in many videos, obviously it's a good idea, to trade the majors, but the minors offer fantastic profit potential, particularly at the moment. That's where the big profits have been. Now, USD CNH, obviously a minor currency, not many traders look at it, so most broker platforms, it's worth a small exposure in our view. Now, in terms of updating the charts, we'll do that and we'll discuss China and some other trades in a little bit more detail. So we'll start off with the weekly chart of USD1. But keep in mind, when I am doing my analysis here, it is my view as of right now. It can change in line with the market conditions. If you want our analysis of this pair and 14 other major Forex pairs and all our trading techniques, you get live access to our member center on the link beneath this video. Right, let's go and take a look at the chart.
Right, we're just on the USD CNH weekly chart. Obviously, last weekend we thought the USD would move sharply higher, and it actually moved higher all week. It's a nice big blue candle, and just settled off the highs. And what I quite like is the trajectory is quite gentle, and now we get the increase in volatility. And I think if you look at the weekly chart, this level here is significant. Okay, obviously that double bottom on the bodies as we were coming down the poke up to try and get back through the level, then the fall down. Okay, in last week's video I noted, when we first came into this trade, we were looking coming through the 20-week moving average, because as soon as it falls through, it halts. And then when it broke up, that was when we decided to take our first position. Gone higher, and then obviously this week, nice move up. So 850 I think is pretty significant. We will be going up to here. I'll explain my logic in a moment when we're on the daily chart. And we could even go way beyond this level, which I'll also explain later. Right, that's the weekly chart. Now let's go and take a look at the daily chart. Right, we're on the daily chart of USD CNH, and in terms of the logic of this trade, it's pretty simple. The Chinese have generally intervened to keep the dollar down since we saw those highs on the weekly chart, and they've given up doing it. I personally think they gave up doing it back here, okay? But on Friday, we had an escalation of trade wars between China and the US. We break this double top here, and then we're off to the upside, nice and blue, and the trajectory is accelerated. The trajectory here, very gentle. We looked at it on the weekly chart, and then of course the trajectory now is much, sort of more vertical to the upside. Now, in terms of the escalation of trade wars between China and the US, it just means the Chinese will just let market forces dictate where this pair should go, and that means the USD will probably go higher. Now, from a technical perspective, the level was just given way. We saw on the weekly chart, it's not so clear from the daily chart. That's why it's always good to look. I'm going to cut my text there, sorry. Level on the weekly chart was 850. It's not so clear when you look at the daily. That's why I'm always in favour of looking at the weekly. So above the level now. So how would you play it if you want to come in? I would just go through those two candle tails there. Because if we follow through, we should get up to daily chart highs. And these highs here, it's the first level of resistance really. On the weekly chart, to get to the level that we put, it's the same again. Okay, so a lot of upside. Now, obviously, breaks higher, you could come in. If it dips lower, wait, come back, on a breakout through these two candles here, or you could key off the 20-day moving average. Now, in terms of doing this video, it's easy for me to give the entry if we go higher. If we go lower, we have to see how things develop into that 20-day moving average. How deep might the correction be if it comes? But we'll track that daily in the member center. But let's say you did come in on strength. I would say those three candles there, body, tail, look pretty good. But I'd hang my stop a bit back, so way back from this tail here, okay? And then see if she runs. Now for us, obviously this isn't just a pure technical setup. But very often if you actually know the big fundamentals behind the technicals, it makes you much more confident in your trade. And we've been long since 630, 650. So back here, and obviously, like I said last week, we've doubled up, okay? The technicals are a reflection of the fundamentals behind the chart, okay? They don't come out of nowhere. When you see this chart moving up, it's obviously the fundamentals and sentiment that is driving the price action. A lot of people think that, price action is just all peaks and troughs and patterns. It isn't, okay? The technicals have a context within what's going on behind the chart, of course, if that makes sense. Right, now what I want to do is go and look at some facts in relation to China, which not only point to the USD going up on the one, up to that weekly resistance level that we noted, but the USD could even go far higher than the target we placed, okay, which I'll explain. I also want to look at how China could create real turbulence in the global economy, and some trades that you can take in addition to this one if you wished, of course, that are related to basically what's going on in China. So let's go and have a look at some key facts, and for me they are really interesting and point to real serious volatility, not just in Forex markets going forward, but in global financial markets generally. So let's take a look at them. Right, let's look at some interesting facts in relation to the Chinese economy. The IMF have expressed concern about what's going on in China in terms of the impact it could have on the global economy. It could cause a severe downturn or even a crash. Obviously, I'm going to be talking about how China affects the Forex markets generally as well, not just the Chinese yuan. Now, in terms of the top, I put something noted by Paul Podlowski of Bridgewater, obviously Ray Dalio's hedge fund, the biggest in the world. And in terms of his research, he said that in excess of 70% of the swings in the global economy are reactions to what goes on in the Chinese economy. And in terms of the global economy, China is far more important than America. So what goes on in China, just so important. Now, China has had spectacular economic growth, especially since 2008. And the growth itself has just been created by building for the sake of building, okay? I'll come to that in a moment, but China is the world's biggest commodity consumer. 50% of the world's cement, nickel, coal, copper, and steel. Now, in terms of this building spree, it's just building for the sake of building. You can see it in the two facts here, how big it is. There's 5.6 billion square meters of buildings in China under construction, which, if you were to get a little cubicle, 5 foot by 5 foot, you could give every man, woman, and child a cubicle of that size. And China is the world's most populous country at the moment. Now, in terms of that's buildings under construction, everyone has seen the ghost cities, okay? Sure, everyone's seen them in videos or documentaries or whatever. No one lives. There's super highways between them with no cars on. It's just building for the sake of building. It's just created a massive amount of debt. And I find the second fact here staggering. China consumed more cement in 2 years than the US did in the whole of the 20th century. I think the years were 2011 to 2013. Now, all this building has just created debt. And, it's now, basically coming to the stage where, property prices are starting to fall in Shanghai and Beijing. That's the first fall, since 2008, I think. The debt expansion is so big. It's the velocity, how quickly that debt has been created that's important. No country in history has ever avoided a crash. And I've talked about the building spree, but throughout China, debts have just been built up, okay? I'll give you another interesting fact, actually. I haven't noted down here, but China built a banking sector the size of the US investment banking sector in 5 years. It took the US 100 years to do it. There's debt everywhere, from local government level to corporations to consumers, okay? And the economy is actually slowing up faster than the official data shows. And you can actually go and look at what's called secondary data. I put rail freight. That's a good indication of how well the Chinese economy is doing. Also, you can look at things like electricity consumption. The figures that we see on Chinese growth are just simply an exaggeration of the truth, okay? And China actually have been a little bit worried about this because they know that local governments lied to Beijing, but they're trying to clamp down on it. But basically, the growth is not as much as you see in the media, and it always makes me not laugh, but it's like the media actually report the figures as if the figures are accurate, okay? I'll give you another figure. I think it's China's unemployment rate in the last 20 years has only moved, if you take it month by 0.25%. That cannot be right. So in 10 years, the unemployment rate has only fluctuated by that amount. It just cannot be true. Now, China's consumer, only accounts for around 30% of GDP. Okay, so that's internal consumption. In the US, it's 70%. Okay, now what this means is really China has to export. It's the world's biggest manufacturer. It's trying, obviously, to build a middle class or get a bigger middle class, but it's just not big enough to take up the slack of falling exports. Now, China has had to increase wages over the years. I mean, they're not great, the wages, but it means that they're losing out to other emerging nations that have a cheaper wage structure, so to speak, such as India, Indonesia. So their exports markets are being eaten into. They've got competition they didn't have a good few years ago. And now trade wars have come. That's coming at the worst possible time for China. You've got a slowing economy, exports slowing, consumption in the economy is not growing quickly enough. And then you've got just a huge pile of debt. So, it is really a critical situation. And the Chinese, they are aware of it. But I think, when they went on this big spree from 2008 in terms of building up the economy, the people who actually run the economy, I don't actually think they knew what they were getting into. And the people in charge of the Chinese economy, none of them have got really a deep economic background. But China's doing its best. It's tried to slow up, the pile of debt growing bigger. It's just so extremely difficult for them. And yeah, they're going to have a downturn. It could become a crash. A downturn is very serious for the global economy. A crash is obviously going to be really, really bad news. And if you look at the global economy and the financial system, it's very, very fragile at the moment, because it's not just debts in China, of course, there's debt everywhere. If you see risk off come, big plunges in stock markets, make 2008 look tame. So, quite frightening facts. Obviously, problems can escalate in China at any time. It might not be tomorrow. It might not be next month. It could be a year's time or whatever. But, the time clock is ticking. So, it's just useful to know these facts, okay, in my view. Right, let's just quickly sum up with some ideas in terms of trading the Forex markets from a longer term perspective, keeping in mind these facts and a few others that I want to talk about.
I'll come back after that short summary there on China and the problems it faces going forward. We believe those problems will continue to strengthen the USD on the Chinese one. Also, I think if things get really bad in China, China might even devalue the yuan. If that happens, the USD will just skyrocket above our targets. Now, in terms of China, we've talked about, obviously, creation of debt there. But it's been a massive creation of debt by just about every major central bank in the world. Now, that debt has mostly ended up in speculative investments like the stock markets of the world, okay? It didn't help economic growth much. You see in the media, it says, how central banks help kickstart growth with stimulus, etc. It doesn't work. They'd been better off not to do it, okay? And the basic argument I put forward in terms of that being true is, if you look at economic growth today, okay, it's the lowest in percentage terms since World War II. And I think, just very quickly, obviously all of that central bank debt that was created has actually stifled entrepreneurism at a lower level, okay, and basically stifled innovation. I'll do that in another video in more detail. But what we have is so much debt around the world, and now central banks are withdrawing stimulus and raising rates. No one knows the repercussions of what will happen, because the amount of debt that was created by central banks is unprecedented. Can they actually get out of stimulus and raise rates so we're back to a normal kind of reality without crashing global markets? I don't think so. Because, like I said, all this debt that was created, a huge amount of it is in stock markets. They are very susceptible to a big downturn, okay? You hear all about, price earnings ratios are good. No, they're not. They're at bubble levels. It was just an artificially created stock market bull rally. And, it just is going to end. It's not necessarily going to end tomorrow, or next month, or maybe even not next year. But I think what you could say is the big moves up in equities are gone, okay, and the risks to big downside breaks have considerably increased. And we need a little bit of a spark, okay, to cause a crash in equities or severe downturn. We've noted China, but what about let's say Eurozone? Eurozone, terrible problems. Italy's already fighting with Brussels. Angela Merkel's already under pressure in Germany. What happens if she falls? Okay, that would really undermine confidence. That could trigger significant selling. But there's just so many things that could. A big bank going down, perhaps. Everyone says the banks are much more solid than they were in 2008. No, they're not. It's all cosmetic. So we could easily see a banking crisis. There's plenty of triggers for a big move to risk off. That aside, I think moving to risk off anyway, or a more cautious environment. Now, in terms of China, even if it doesn't crash, it's slowing up at a dramatic rate. Commodity prices are going to fall. So in terms of other trades, basically look for emerging markets that are heavily exposed to commodities, and you'll see that they're already going down. Just check out USD ZAR, USD Mexican peso. USD is really pushing up on those emerging commodity currencies. Okay, one I think that is going to really run up is USD Russian ruble, and you don't need big positions in these pairs because they're very, very volatile and fast moving. And I think if you want to stick with the majors, two currencies I'd be looking at as long-term sells would be the Aussie and New Zealand dollars. Now they've been pretty firm, but they're both heavily exposed to China. Their export market is the major export market. The commodities that they export are going to be going down in price. Also, the Aussie and the Kiwi are going to suffer from risk off. So I think they are worth looking at as long-term trades. There's actually plenty of great trades around at the moment. You actually do find them, in my view, in the lesser looked at pairs. One of our best performing pairs this year has been USD Tri Turkish Lira. USD has surged nearly 20% against it in a few weeks. Also, another one to look at, although not many people can trade this, I'm very surprised that not more brokers have it on their platform. It's a Brazilian Real. And Brazil is one of the world's major economies. That is a great pair to trade if you can trade it. I mean, you can only really, I think, trade it in the futures market. Okay, so if you've got a futures account, you can take a look at it. Again, good trade for a small position. Generally in our trading, we're kind of positioned mostly the safe currencies for the risk currencies. I think they're going up anyway. Longer term, USD. Then obviously there's JPY, the CHF. But if you get real problems in the global economy, they're all going to soar higher on the weaker currencies. I did a video on which I call Big Money Flow, which is related to what I'm saying here. So you can check that out on our channel. So we'll see what happens with USD CNH. I'll probably come back and do a few more exotic currencies as well as the majors, of course. Anyway, I hope you found the video interesting, and that is it for today. Thank you very much for watching me as usual. Take care and have a good day.